What's up guys, and welcome back to the channel. I said on Thursday that I would be looking into some new companies this weekend, and this is the first of those. If you've been following the markets in recent weeks, then you know that the EV sector is booming right now. Tesla reached insane all-time highs, making Elon Musk by far the richest man in the world. The IPO of Rivian earlier this week seen it be placed at an initial valuation of over $80 billion before rallying on Thursday and Friday, and is now worth more than $100 billion. The EV sector stocks took a bashing during 2021, but in recent weeks we've seen major revivals such as Lucid and EVgo that have both gained over 100% recently. These two stocks in particular went public via SPAC mergers, and the stock that I am talking about today is also a SPAC. Gores Guggenheim, ticker GGPI, is one of the most talked about stocks in the world right now, and for good reason. If you've been watching my channel over the past few months, then you will have seen the huge gains that we made recently. Over the past few months we've seen 9x gains on ILS since my first ILS video. We've had 10x gains on Shiba Inu from the time of my first Shiba Inu video back in May when nobody else was talking about this. And in the past few weeks alone we've seen AABB stock 3x from the time of my video in September. If you watch my recent Petrotech videos, I covered the stock a few weeks ago at only 11 cents, telling you about a potential buyout offer coming. This stock reached as high as 34 cents just a few days later, and even now it's a bargain at only 18 cents. The board of directors currently has an offer on the table to buy the shares at 74 cents per share. So what are you waiting for? Hit that subscribe button now and stop missing out on these huge money making stocks. Turn on notifications and find out about these stocks as soon as I make a video, instead of finding my video after the stocks have made huge gains. It costs you nothing, but it could make you a lot of money. This is not financial advice. I encourage everyone to do your own due diligence. Now let's dive into it. GGPI, Gores Guggenheim, went public with its IPO in March. The firm is backed by serial entrepreneur, billionaire Alec Gores and the Guggenheim Investment Group. If you're not familiar with Gores Guggenheim's strategy is to identify and complete business combinations with market-leading companies with strong equity stories that will benefit from the growth capital of the public equity markets and be enhanced by the experience and expertise of Gores and Guggenheim's long history and track record of investing in and operating businesses. Gores have brought several companies public over the past year, including Luminar, which reached as high as $47 but is now trading at 93% above its IPO price at $19, or Matterport, which is currently over 105% above its IPO price, currently at $22. At the time of the GGPI IPO, we had just come to a time when many de-SPAC companies' share prices had begun dropping and the SPAC hype had ended. The share price didn't move too much until September, when Gores Guggenheim announced its reverse merger with Polestar. With that announcement, GGPI stock went from less than $10 to a high of $10.69, but just as quickly faded back to $10 again. The Polestar deal will be supported by cash proceeds of around $800 million from Gores Guggenheim and includes a PIPE or private investment in public equity of $250 million from top-tier institutional investors. Polestar, backed by Volvo Car Group and Geely, also counts Hollywood actor Leonardo DiCaprio among its investors. Polestar is a global, pure-play, premium electric vehicle company based in Sweden with a mission to produce progressive electric performance cars designed and engineered without compromise. They say that they are design-focused electric performance car brand harnessing refined performance and cutting-edge technology. Determined to improve the society we live in by accelerating the change to fully electric, climate-neutral future, they are trying to achieve net zero greenhouse gas emissions while leading development of new technologies. The company was originally founded in 1996 as a racing company and developed a partnership with Volvo before being acquired by the Volvo Group in 2015. They announced their Polestar 1 in 2017 and Polestar 2 in 2019. In 2019 they opened their Polestar production facility, and by 2020 were making their first sales. As of 2021, the company is operating in select countries across Europe and the United States and Canada, but are planning major expansion over the next 2 years across Europe, Asia and the Middle East. There is a lot of EV companies getting a lot of attention over the past few weeks. We have seen Lucid begun to make some gains. Lucid had reached as high as $64 back in February before dropping to only $18 in September. In the past few weeks, Lucid stock has gained over 150% and is now up to $43 with a market capitalization of over $70 billion. And this week we had the highly anticipated IPO of Rivian Automotive. This IPO'd at over $70 before making huge gains on Thursday and Friday, with the company now having a market capitalization of over $110 billion. And then we have Tesla, which now has a market capitalization of over $1 trillion. Polestar is valued very modestly in comparisons to all of these. The IPO price placed an enterprise valuation of just $20 billion on Polestar. The transaction will result in approximately $995 million of cash added to Polestar's balance sheet to go towards funding its business plan and future model launches. So to have nearly $1 billion of cash at its disposal will be significant. And Polestar price of $20 billion means that it is 3 times its 2023 estimated revenue and 1.5 times its 2024 estimated revenue. This is very favorable when compared with its US peers Lucid and Tesla, who have 10.8 times and 6.5 times of their 2023 estimates and 9.3 and 3.6 times their 2024 estimates. Now, this investor's presentation is from its merger announcement in September, so I have adjusted these figures to reflect the current price changes. Tesla was trading at over $1,200 before Elon Musk decided to crash the price with a huge sell-off. At that price, Tesla would have been 63% above the price in this presentation, or trading at 15 times projected 2024 revenue. Lucid at the time of this presentation was only about $24, so it is currently 75% above that price and therefore about 6 times 2024 estimated revenue. GGPI was trading at $10 at the time. Now this is up to $12.81. So that's a 28% rise, so the current price is still less than 2 times its 2024 estimated revenues, which is an extremely low valuation in my opinion. And this is reflected by Alec Gores, who said that the SPAC deal represented a great entry point into Polestar because GGPI was conservative in its valuations. This stock has got huge gains to make yet, and Polestar also compares very well to NIO and Xpeng, who each have market capitalizations far in excess of Polestar's $20 billion valuation. When it comes to projected growth over the next 4 years, we can see that Polestar is second to only Lucid on the annual growth rate projections. Now it's worth noting here that Tesla is the lowest of these, but that is because Tesla is very much the market leader. Tesla is the most established and is a leader in the EV sector. Lucid is due to publish its first earnings report on Monday and has only began its very first deliveries in the past 2 weeks. I mentioned Rivian earlier. This went public during the week and now has a market cap of over $100 billion. Although it's being backed by some major players, as of yet they still have no sales. NIO seen huge rises in 2020 and is becoming well established now in China, but as of yet they operate in China alone. Polestar is operating across the globe right now and expanding exponentially. Polestar is now well ahead of and more established than Lucid in terms of sales so far, with approximately 29,000 sales in 2021, and this is expected to see huge growth rates over the next few years. Over the next 4 years, it's expected that Polestar 2, 3 and 4 are expected key drivers of volume from 2003 onwards, mainly from the launch of the latter 2 models, resulting in significant sales increases. And Polestar is expecting to see huge revenue increases in these years, reaching a 20% gross profit margin by 2023 and achieving positive free cash flow in 2024. On Friday, Polestar won 2 Wards Auto awards for the Polestar 2. Wards Auto A global leader in automotive intelligence, this year they've chosen Polestar 2 as one of 2021's Best Engines and Propulsion System winners, as well as this year's Best UX winners. Praising Polestar 2's mastery of UX design philosophy, this is one of the most intuitive, efficient, human-machine interfaces that I've ever encountered in a car. This, along with the minimalistic design and the fact that it was the first car to feature a native Android automotive OS, ensured Polestar 2's victory, according to Judge Jim Irwin. In a time when so many EV companies do not actually have real cars that are rolling off the production line, we are generally looking at these companies and assessing the potential based off projections. And those projections and concepts are not always what they seem. Who remembers when Nikola had to admit that their prototype was rolling downhill in a promotional video after saying that they had a fully functional vehicle? Polestar already have the cars out there for us to be able to see and get an actual opinion of. And Wards Auto praise it as a near perfect blend of the BEV formulation. Polestar 2 is a blast to drive, which offers up enough miles between charges for any commuter. And on Friday, the stock jumped 16% after the company filed its preliminary proxy, and on general excitement around the EV sector right now. As I said already, at the time of the IPO, Alec Gore stated that the SPAC deal represented a great entry point into Polestar because GGPI was conservative in its valuation. The move in GGPI also comes after Rivian Automotive rose again following its IPO earlier this week and has now gained 65% since its IPO. Rival electric car maker Lucid Group, which also went public through a SPAC deal, has risen about 83% since its de-SPACing in late July. Lucid Group now sports a market cap of more than $65 billion. So guys, that brings us to the end of the video. If you've watched all the way through, then hit that like button. It really helps the channel out a lot. Before anyone jumps to any conclusions, although I mention other EV companies in this video, I'm not saying that these are bad companies or that they are undervalued or overvalued in any way. This video was solely about Polestar. Polestar is a company that I feel is undervalued, and by comparing it with the likes of Lucid or Neo, I am trying to show you why I feel Polestar is undervalued with some logical reasons. When we see the market capitalization that some of these companies already have, then I feel that 20 billion here seems very low. If you're new, hit the subscribe button and bell notification. Follow me on Twitter and I'll catch you in the next one.